This content is provided by Gann Trader Market Education for educational and informational purposes only. Trading financial markets including Forex, stocks, futures, and cryptocurrencies involves substantial risk and may not be suitable for all investors. The use of leverage can work both for and against you, and it is possible to lose part or all of your invested capital. Only trade with capital you can afford to lose. Any analysis, commentary, or market views presented reflect personal research and should not be considered financial or investment advice. By viewing this material, you acknowledge that all trading decisions are made entirely at your own risk. Gann worked on many different kinds of cycles. He studied long-term price cycles such as 30-year, 60-year, 90-year, and even 100-year cycles. He also explored much larger cycles beyond that. There has always been discussion about his connection with astronomy, astrology, and other subjects. According to Gann, each stock, index, commodity, or market instrument operates on its own natural frequency. When price and time align with that frequency, the market reacts. Sometimes that reaction appears as a sharp reversal. Sometimes it shows up as increased momentum, and at other times as consolidation or pause. In this chart of the British pound, you can observe how the market reacted precisely at a specific time vibration. Now, depending on the time frame, these vibrations express themselves differently. On higher time frames, vibration may produce major bull or bear cycles. On lower time frames, such as daily charts or intraday charts, the same principle produces smaller reversals. The principle remains the same, only the frequency changes. In this example of the same British pound chart, the 4-hour time frame was showing a bullish bias. Yet on the 1-minute time frame, the vibration created an opportunity for a short-term selling trade. If we take Gann's concept deeper, we can understand market vibration through the principle of musical octaves. Now, let us understand this in a very practical way. In music, when a frequency doubles, it moves to the next octave. When it halves, it shifts to a lower octave. The note is still the same in nature, but its vibration operates at a different level. The idea of the octave is closely connected with the number 8. In music, the 8th note completes the cycle and returns to the same note again, but at a higher frequency. In other words, the pattern repeats, yet it operates on a higher level of vibration. This repeating structure of 7 intervals leading into the 8th creates a harmonic cycle. Many researchers of natural law have associated this pattern with the deeper mathematical and mystical qualities found in nature. If you observe this carefully, you can see that the waveform maintains the same basic structure even as the frequency changes. The pattern itself does not disappear or transform into something completely different. Instead, the waves simply become more compressed as the vibration increases. In other words, the structure remains consistent while the rate of oscillation becomes faster. This is a simple visual representation of how vibration works in nature. And this same principle of repeating structure with changing frequency is what Gann believed could also be observed in market movements. When price doubles from 100 to 200 or from 200 to 400, it is not just increasing randomly, but it is moving into a higher vibration zone. Likewise, when price drops from 100 to 50 or from 50 to 25, it is shifting into a lower octave of the same structure. Now, think about what happens psychologically at these levels. When a stock moves from 100 to 200, market participants naturally perceive it as a major expansion. Attention increases, profit-taking begins, and reactions often occur. The same happens near 400 or 800. These levels feel big because they are harmonic expansions of the original base price. Gann referred to this as geometric price movement, where markets expanding and contracting in measurable proportions. This is also where the logic behind the square of 9 and natural resistance levels comes into play. Price is not just climbing, it is vibrating through structured intervals. When it reaches a full octave expansion, the market often pauses, consolidates, or reverses because it has reached a natural balance point in its vibration cycle. If we extend this idea even further, we begin to see that these octave relationships appear throughout nature. One of the most fascinating examples is the electromagnetic spectrum. As we move up the spectrum, the wavelengths become shorter, the frequency becomes faster, and the energy becomes more concentrated. As we move down the spectrum, the waves become longer, slower, and less dense. Yet all of these frequencies belong to the same continuous spectrum of energy. What is even more interesting is that human perception can only detect a very small portion of this entire range. Our eyes can only see a narrow band of visible light, while countless other frequencies exist beyond our senses. Radio waves, infrared, ultraviolet, X-rays, and gamma rays are all real, yet most of them remain invisible to us. This idea becomes important when we think about markets through the lens of vibration. Just because we cannot directly see certain forces does not mean they are not present. Gann believed that markets also operate within natural laws and frequencies that are not always obvious on the surface. Price charts show us the visible movement, but beneath that movement, there may be deeper harmonic structures guiding the rhythm of the market. The octave signals the movement to a new level. On a piano, there are 8 white keys from C to C, and the 8th note marks the completion of an octave. Along with the 8 white keys, there are 5 black keys which produce the sharps and flats, forming the full chromatic scale of 12 notes. When the scale continues, the 13th note begins the next octave, repeating the same pattern at a higher vibration. Between each step of the chromatic scale, there are 12 major overtones. These overtones replicate the same harmonic pattern found in a larger structure. In other words, the system is holographic. The same structure repeats upward and downward indefinitely, creating what is known as a geometric progression in harmonics. When we look at it numerically, we find an interesting relationship. There are 12 notes in an octave and 12 overtones between each note. This creates a total of 144 harmonic levels between one octave and the next. These subovertones and sub-subovertones overlap and interact with each other, forming a complex structure of vibration that exists simultaneously at every point in space and time. This is where the connection to Gann's work becomes fascinating. Gann believed that markets also operate according to natural laws of vibration and harmonic proportion. The number 144 appears repeatedly in his studies of time cycles and market movement. Traders who follow Gann's methods often observe that markets react around 144 bars of time, or multiples of that vibration, such as 288 or 432. When this harmonic time cycle is combined with proportional price movement, we arrive at relationships such as the 144 by 225 cycle. In this framework, time and price move in structured proportions, and when those proportions begin to align, the market frequently produces important turning points. In other words, just as harmonics create structure and sound, similar harmonic relationships may also organize the rhythm of price movement in financial markets. Gann also applied this concept when studying price movement. Instead of musical notes, he divided price ranges into 8 equal sections. In other words, one complete price range could be broken down into 1 by 8, 2 by 8, 3 by 8, 4 by 8, all the way up to 8 by 8. These divisions represent structured harmonic points within a market. But Gann did not stop with price alone. He believed that time also moves through proportional divisions. Just as a price range can be divided into eighths, a time cycle can also be divided into equal segments. When the market progresses through these fractions of time, while price simultaneously reaches harmonic divisions of its range, a point of balance begins to form. These moments where time and price reach proportional relationships are where again expected important market activity to occur. Sometimes the result is a reversal, sometimes a pause, and sometimes an acceleration in the prevailing trend. The key idea is that the market often responds when both time and price reach a harmonic relationship at the same moment. Another way to understand the idea of the octave is through geometry. In mathematics and natural design, harmonic relationships often appear as simple ratios. The most important ratio connected with the octave is 2 to 1. When a frequency doubles, it creates the next octave. This same 2 to 1 relationship appears repeatedly in geometry and natural structures. For example, if we place an equilateral triangle inside a circle, we can observe an interesting geometric relationship. The outer circle, known as the circumcircle, surrounds the triangle, while a smaller circle can exist inside the triangle known as the incircle. The diameter of the larger circle is exactly twice the diameter of the smaller one, creating the same 2 to 1 relationship that defines an octave. When we look at the mathematics behind the octave, we find that it follows a simple geometric progression. Each step is a doubling of vibration represented by powers of 2. What makes this interesting is that similar geometric expansions often appear in financial markets, where price moves through proportional ranges and time progresses through harmonic cycles. The geometric structures in this diagram illustrate how harmonic patterns expand while preserving their internal proportions. As we move outward from the center, each circle represents a larger level of the same system, yet the geometric relationships remain consistent. This concept becomes easier to understand when we visualize it through geometric shapes. When a circle expands proportionally, the relationships between its internal structures remain consistent. In other words, the pattern repeats while the scale changes. Gann was deeply interested in these types of geometric relationships. He believed that markets, like many natural systems, follow mathematical proportions rather than random movement. Price expands and contracts in measurable ratios, and these ratios can often be observed when studying market swings. In the previous chart of British pound, a circle is drawn using the swing high and swing low as the defining points of the geometric structure. This creates a natural boundary that represents the full movement of the price swing. Now, notice something very interesting. The outer edge of this circle aligns almost exactly with the 2 by 8 division of the time cycle plotted on the chart. And that's where it takes previous liquidity point without even small retracement. Here, if we draw another circle from the top to bottom, then again circles boundary align with 2 by 8 division of the entire swing. This adds another confirmation of quick price reaction. The same harmonic principles can also be observed when we study astronomical cycles. Planetary motions occur at extremely slow frequencies when compared to sound or electromagnetic waves. However, according to the principle of octave relationships, any frequency can be shifted upward by repeatedly doubling it. This process is known as octave shifting. By multiplying a very small frequency by powers of 2, the same vibration can eventually appear in a completely different range while still preserving its harmonic identity. To understand this idea, consider the orbital motion of the Earth. The Earth completes one full cycle around the Sun in approximately 1 year. When we convert this cycle into seconds, 1 Earth year equals approximately 31,556,926 seconds. This means the natural frequency of the Earth's orbit is extremely small when measured in cycles per second. If we express this orbital motion as a frequency, the value becomes 3.1556926 times 10 to the power of minus 8 Hz. This frequency is far below the range of human hearing. However, when we apply the octave principle and repeatedly double this frequency, something remarkable begins to appear. When this Earth frequency is multiplied by 2 repeatedly for 36 octaves, the value becomes approximately 136.1 Hz. This frequency lies within the audible sound range and corresponds closely with the musical note C#. In other words, the vibration of the Earth's orbital motion can be translated into a musical tone through octave expansion. To apply this concept in market analysis, the key idea is not to convert planetary motion directly into sound, but to recognize that planetary cycles represent measurable vibrations in time. If a planetary frequency can be octave shifted mathematically, then the same principle suggests that large astronomical cycles may express themselves as smaller repeating cycles in market time. For example, the Earth completes one orbit around the Sun in 1 year. If we divide this cycle into smaller harmonic segments, we obtain important fractions such as 1/2 year, 1/4 year, and 1/8 year. These divisions correspond to natural time intervals that often appear in financial markets as seasonal turning points. When planetary vibration, market time, and price proportion begin to synchronize, the market can reach what Gann described as a point of vibrational balance. At these points, the market may reverse direction, pause, or accelerate depending on the prevailing trend structure. This idea of harmonic proportion is not limited to sound or geometry. It also appears in the motion of celestial bodies. Ancient philosophers described this concept as the music of the spheres, also known as musica universalis. According to this view, the movements of the sun, moon, and planets follow precise mathematical relationships that resemble musical harmony. Remarkably, astronomers have observed that many planetary and orbital motions follow very similar ratios, just as music ratios. The orbital periods of different planets and moons often form simple whole number relationships, creating resonances that resemble musical intervals. For example, the orbital relationship between Earth and Venus forms a ratio close to 8:13. Likewise, Neptune and Pluto move in a 3:2 resonance, which corresponds to the musical interval known as the perfect fifth. Even the relationship between the Earth and the Moon displays a remarkable form of resonance. Because the Moon rotates in synchronization with its orbit around Earth, we always see the same side of the Moon. This synchronized motion resembles what musicians describe as perfect union, where two frequencies move together in harmony. The importance of these resonant relationships is that they demonstrate how large celestial cycles can be expressed through smaller harmonic intervals. Just as a musical tone can be divided into octaves and fractions, planetary motion can also be subdivided mathematically into smaller segments of time. When these harmonic divisions are translated into market analysis, they provide a framework for identifying moments when price movement may synchronize with larger natural cycles. To illustrate how these principles can appear in market analysis, we will examine a real example from the gold market. Here is the chart of gold on July 27, 2025. The market opened with a gap down, but the first candle of the session closed back inside the gap at the price level of 3,333. This level immediately attracted attention because of its clear numerical symmetry. In Gann analysis, repeating number structures often indicate zones where price vibration becomes concentrated. Such levels can act as natural pivots where the market decides whether to continue its movement or reverse direction. When these planetary price levels are plotted on the chart, one of the most important observations appears near 3341. At that moment, Jupiter was positioned near 101 degrees of longitude, and the equivalent price derived from that degree was approximately 3,341. As the market approached this level, gold encountered immediate resistance and struggled to move higher. The inability of price to break above the 3,341 level resulted in the formation of a clear swing high. Shortly after touching this planetary resistance, the market reversed direction and selling pressure began to dominate. This reaction shows how planetary degree conversions can translate into real market resistance zones where price vibration loses momentum. Once this swing high was established, it became the reference point for the next step of analysis. The exact time of this high is used to calculate the ascendant degree at that moment. In Gann's astro methodology, the ascendant acts as a moving clock of market vibration. When the ascendant later returns to the same degree, it often marks a moment when time and price re-enter harmonic alignment. The swing high in gold occurred at precisely 2:10 a.m. on July 28, 2025. Because the ascendant advances roughly 1 degree every 4 minutes, accurate timing is essential. Even small timing errors can shift the calculated degree and disrupt the harmonic relationship which we are calculating. Using the astro calculation, the ascendant at the moment of the high was determined to be 91 degrees. This value now becomes the key vibration we monitor. When the ascendant reaches this same degree again later in the trading session, the market may reach another point where time and price synchronize. The next recurrence of ascendant 91 degree was calculated to occur at exactly 9:47 a.m. on the same day. This creates a projected time window where a reaction becomes possible. At this stage, the objective is not to predict direction blindly, but to observe whether price approaches one of the planetary levels during this exact time alignment. I have placed a vertical line on the chart at 9:47 a.m. to mark this anticipated timing point. This allows us to visually monitor how price behaves as the market approaches the predicted moment of harmonic timing. Next, we plot the planetary support and resistance levels calculated earlier. These horizontal price levels represent points where the market may encounter natural vibrational boundaries. When a vertical time cycle intersects with a horizontal price level, the chart reveals a potential moment where time and price meet. With the predicted time fixed at 9:47 a.m., attention shifts to how price behaves relative to these levels. If the market reaches one of these planetary prices at the same moment the ascendant returns to its previous degree, a harmonic intersection of time and price occurs. As the market approached the predicted moment, selling pressure intensified and gold declined rapidly. At exactly 9:47 a.m., the market reached the 3301 price level associated with Uranus. Immediately after touching this level, price rejected sharply and reversed upward. Following this reaction, gold did not revisit the 3301 level again. Instead, the market produced a series of strong bullish candles, confirming that buyers had entered the market at that exact time price intersection. From this reaction low, gold rallied approximately 32 points, returning toward the earlier reference zone near 3333. The movement illustrates how a harmonic alignment between planetary timing and price levels can produce highly precise turning points in market behavior. Gann's methods shows that market movements reflect the same harmonic principles that appear in nature and astronomy. Planetary motion provides a repeating framework of time cycles, while price movement reflects the expansion and contraction of market vibration within those cycles. The discussion of harmonic vibration becomes clearer when we examine the work of Pythagoras and the mathematical structure of musical tuning. In the Pythagorean system, musical notes were not created arbitrarily. Instead, They were derived through precise mathematical relationships based on frequency ratios. This system used the concept of fifths, where each new tone was generated by multiplying the previous vibration through a fixed proportional relationship. Beginning from a bass tone, Pythagoras assigned numerical values to each note on a harmonic grid. Starting with the value of 1, the sequence progressed through mathematical relationships until reaching the value of 27 Hz. From this point, the frequency continued to expand through doubling, producing the sequence 54, 108, 216, and eventually 432 Hz. These numbers form a harmonic progression where each step represents an octave expansion of the same underlying vibration. Pythagorean tuning also revealed an interesting mathematical phenomenon. After moving through 12 fifths, the 13th step should theoretically return to the original note 7 octaves higher. However, the calculation does not close perfectly. Instead, it reaches approximately 98.656% of the expected value. This small discrepancy is known as the Pythagorean comma, and it represents the tiny difference between mathematically generated harmonics and perfectly closed cycles. Within the Pythagorean framework, the number 432 continues to appear as a central harmonic reference. Because it emerges from a sequence of octave expansions, it represents a frequency that preserves the original harmonic proportions while operating at a higher vibrational level. When we shift our focus from music to market behavior, the same mathematical idea becomes very interesting. Financial markets are also systems that move through cycles of expansion and contraction. Price advances, consolidates, and reverses in repeating structures that often appear proportional when measured carefully. The number 432 can be interpreted not as a musical frequency, but as a cyclical measurement unit. Just as musical vibrations can be divided into smaller harmonic segments, time in a market can also be divided into measurable intervals such as bars, minutes, or days. This leads to an interesting analytical approach, which is, if harmonic numbers represent structured vibrations in nature, similar numbers might occasionally appear when measuring the rhythm of market movements. By observing intervals such as 432 bars for 132 minutes or subdivisions of this cycle, we can monitor points where the market may be completing a measurable time vibration. A more refined approach emerges when harmonic time measurements are combined with planetary longitude calculations. In astro-based market analysis, planetary positions are often converted into numerical degrees, and these degrees can be projected onto price levels within a market chart. Let's look how 432-degree planetary movements can play out in real markets. Here we examine dollar-yen daily chart, where the concept of a 432-degree lunar shift is applied as a timing mechanism. The starting point of the analysis is an anchor date marked on the chart near April 22nd, 2025. From this anchor point, the movement of the moon is measured in cumulative longitude. Instead of focusing on individual planetary aspects, the analysis tracks how many total degrees the moon has traveled from the original reference position. The moon completes approximately 13 degrees of zodiac motion per day. By continuously accumulating this movement from the anchor point, we can measure when the moon has traveled larger harmonic distances such as 432 degrees, 864 degrees, 1,296 degrees, and higher multiples. Each of these values represents another full harmonic expansion of the original cycle. The first important timing interval occurs when the moon completes its first 432-degree shift from the anchor position. On the chart, this moment is represented by the first vertical red line. As price approaches this timing window, the market begins to lose directional momentum and forms a noticeable reaction in the prevailing move. What makes this observation interesting is that the reaction does not require the moon to return to the same zodiac position. Instead, the important factor is the total accumulated movement of 432 degrees. In other words, the cycle is measured through harmonic distance traveled rather than a simple return to the starting point. The next vertical marker appears at 864 degrees, which represents a doubling of the original 432 vibration. This is effectively the second octave of the same harmonic cycle. When the market reaches this timing point, price again shows a clear shift in behavior, producing a noticeable change in the direction of short-term momentum. Continuing forward in time, the next key interval occurs at 1,296 degrees, which is the third multiple of the original 432 vibration. At this stage, the market had already been trending upward for some time, yet the arrival of this harmonic time point corresponded with another period of hesitation and structural change in price movement. The fourth cycle appears at 1,728 degrees, extending the same harmonic structure further in time. What is important here is that the spacing between each vertical line remains consistent because it is based on the moon's accumulated motion rather than arbitrary calendar intervals. This creates a rhythm that is tied directly to planetary movement. Around the 1,728 degree timing point, the market again shows a noticeable reaction. The candles begin to compress and the directional move temporarily slows. Such behavior often indicates that the market is encountering a natural timing boundary where the existing trend may pause or adjust. The final timing marker displayed on this chart occurs at 2,160 degrees, which represents the fifth harmonic expansion of the original 432 cycle. By this stage, the cumulative lunar movement has covered several months of market activity, yet the timing structure remains mathematically consistent. Here we can see that the 432 harmonic structure expands through multiples such as 864, 1296, and 1728, continuing indefinitely. Each multiple represents another octave expansion of the same vibrational framework, similar to the way musical harmonics expand through repeated doubling. Let's look at another example where we examine the pound-dollar currency pair using the angular relationship between the sun and the moon as a timing mechanism. The analysis begins from the swing low formed in February 2021, from which the cumulative angular distance between the sun and moon is measured. The first major interval appears when the sun and moon pair completes the 432-degree shift on March 31st, 2021. As the market approaches this timing point, pound-dollar forms a local swing low and begins to stabilize before shifting direction. This reaction suggests that the harmonic planetary interval coincided with a moment where selling pressure started to weaken. The next harmonic interval occurs at 864 degrees on May 5th, 2021. Around this period, the market again shows a clear reaction as price transitions from a downward phase into a renewed upward move. The alignment between the planetary shift and the change in price behavior indicates that the cycle may be influencing the timing of short-term market adjustments. The third interval appears at 1,296 degrees around the 10th of June 2021. Near this timing window, the chart shows the formation of a prominent swing high. Shortly afterward, bearish momentum begins to develop, leading to a noticeable decline in the following sessions. The harmonic structure continues with further expansions at 1728 degrees on July 15th, 2021, and 2160 degrees on August 20th, 2021. At both of these intervals, the market again displays clear reactions, first producing a sharp downward movement in July and later forming a swing low during August. This shows how cumulative sun-moon angular movement can create a consistent timing framework for identifying potential turning points in the market. Another concept that becomes important when studying natural harmonic systems is the idea of dynamic symmetry. This principle describes a way of dividing space so that the proportions of the whole structure are reflected within its smaller parts. In trading analysis, this idea becomes relevant when we observe that market swings often contain smaller movements that resemble the structure of a larger trend. Dynamic symmetry appears frequently in natural design. Whether we observe plant growth, shell formations, or spiral galaxies, similar proportional relationships repeat across different scales. Markets often behave in a comparable way, where a major trend on a weekly chart may contain smaller trends on daily or intraday charts that mirror the same directional structure. Gann's analysis relied heavily on studying these nested price movements across multiple time frames. Gann has identified several numerical constants that frequently appear in proportional systems. Among the most important are pi, the square roots of 2, 3, and 5, and the golden ratio. These constants define relationships between the parts of geometric figures and their overall structure. In market analysis, Gann attempted to uncover similar proportional relationships between time cycles and price movements. For example, the constant pi describes the relationship between the circumference and diameter of a circle. Because circles play a central role in geometry, this ratio appears in many natural systems involving rotation or orbital movement. In trading, circular geometry is often used when studying market cycles, and Gann frequently represented time cycles through circular charts that illustrated repeating market rhythms. Another important proportional constant is the square root of 2, approximately 1.414. This ratio appears when a square expands diagonally into a larger square. In trading terms, this type of geometric expansion resembles the way price ranges can expand proportionally during strong trends. Gann examined price movements through geometric shapes to identify how markets expand and contract within structure proportions. Similarly, the square root of 3 and square root of 5 appear in geometric constructions involving triangles and pentagonal structures. These shapes naturally generate proportional relationships that maintain structural balance. In market analysis, Gann used triangular and angular relationships to study how price movements evolve relative to time, forming the basis of his angle-based charting techniques. One of the most famous proportional relationships in sacred geometry is the golden ratio, approximately 1.618. This ratio describes how a line can be divided so that the smaller part relates to the larger part in the same way the larger part relates to the whole. We call these proportional relationships as Fibonacci tool that helps in identify price retracement and expansion levels, which can reveal potential turning points within a trend. The golden ratio also generates the well-known golden spiral, which appears in many natural growth patterns. When markets trend strongly, price movements sometimes display similar spiral-like expansions where each new wave extends proportionally from the previous one. As we saw before, that music also provides an important example of harmonic proportion. Musical harmony is governed by simple numerical ratios. For example, 2:1 represents the octave, 3:2 represents the perfect fifth, and 4:3 represents the perfect fourth. These relationships produce stable sound structures. In trading, similar numerical ratios can sometimes be observed in the spacing of time cycles between important market highs and lows. These musical ratios shows that harmony emerges when frequencies relate through simple mathematical proportions. When price movement and time cycles reach similar proportional relationships, the market may temporarily reach a point of equilibrium. Dynamic symmetry expands this principle by showing how structures can maintain proportional balance even as they grow larger. A pattern may repeat itself at multiple levels while preserving the same mathematical relationship. Markets often display this behavior when large trends contain smaller internal waves that follow similar proportional spacing. This repeating structure across multiple scales is known as scale invariance. In mathematics and physics, scale invariant patterns are commonly associated with fractal geometry. Financial markets frequently show fractal behavior, where patterns observed on higher time frames resemble those found on smaller charts. In trading, this fractal nature of markets is extremely important. A price pattern that appears on a weekly chart may also appear on a daily or hourly chart with similar proportions. When price movements expand or contract, the relationships between swings often follow recognizable proportions. If we measure these swings, we can identify if the market structure remains balanced or momentum is beginning to shift. One practical application involves comparing the duration of market swings with the magnitude of their price movement. If time and price begin to move in proportional harmony, the market may approach a moment where a new phase of movement begins. Another useful approach is to observe whether similar geometric proportions appear between consecutive swings. When these relationships repeat across multiple time frames, they can help identify structural turning points within a trend. Up to this point, we have explored how markets can display harmonic relationships through vibration, cycles, geometry, and proportion. One interesting way to study this relationship is through geometry and Gann angles. If time is viewed as a repeating cycle, it can naturally be represented through circular structures. At the same time, price often moves through directional paths that can be studied through angles and proportional slopes. One of the geometric tools used to study the relationship between time and price is the concept of Gann angles. These angles represent the proportional movement of price relative to time. In practical terms, each angle reflects a different speed of price movement. A steeper angle indicates a faster rate of advance, while a flatter angle represents slower progression. As price interacts with these angular paths, they often behave as dynamic support or resistance levels. When a market respects a particular angle, it suggests that price is maintaining a consistent rate of movement. However, when price begins to break above or below an angle, it can indicate that the existing momentum is changing and the market may transition into a different phase of movement. To make it easier to identify important geometric price levels on the chart, I developed this fixed Gann angle tool that plots the angle framework automatically once the key swing high and swing low are selected. I provide this indicator for free in my private teachings under strict NDA. When applying the indicator, students only need to identify the swing points used for the calculation. The anchor is counted from the current candle backward by the specified number of bars. For the swing high, need to select the highest wick option, and for the swing low, need to select the lowest wick option. All calculations are done once during the initial setup. After that, the angle structure remains fixed on the chart for particular swing points. Unlike many standard tools that continuously rescale as new candles appear, this indicator is designed to remain static so the original geometric proportions stay preserved. After these anchor points are defined, the angle framework remains fixed on the chart. This indicator helps me observe how price evolves relative to the projected paths. Unlike many standard angle tools that continuously rescale as new candles appear, this one preserves the original geometric proportions. It makes it easier to see how price interacts with the same angular framework over time. Let us now observe how this geometric framework appears in an actual market example. In this chart of gold on the 1-minute time frame, I have identified a swing high and swing low. These 2 points represent a completed market movement and provide the reference structure from which the geometric framework will be constructed. Once these reference points are selected, I then plot the Gann angle structure from the swing high. This creates a framework of angles on the chart, where each angle represents a different rate of price movement relative to time. This circular boundary gives us a projected time point, which is 3:07 p.m. At this moment, our focus shifts to observing how price reacts. As the market reaches this time boundary, we carefully watch the behavior of price relative to the projected angles to see whether the market slows down, stabilizes, or begins to reverse direction. At 3:07 p.m., price begins to break above the 8x1 angle. As the market moves above this level, the selling momentum starts to fade and price begins to stabilize along the 8x1 path. In Gann angle analysis, steeper angles such as 1x8 or 1x4 represent very fast price movement, where price advances rapidly relative to time. When price shifts from a steep declining angle to a flatter or opposite angle, it often signals that the market is transitioning into a new phase of movement. This point represents a moment where time and price geometry begin to align. The circular boundary marks the anticipated time window, while the angle provides the structural path of price. As the market reacts around this intersection, we observe that price begins to hold above the 8x1 support level at the time we predicted. Shortly after this interaction, the market produces a strong upward movement. From this point, the price rallies sharply, producing a move of approximately 32 points within a relatively short period of time. This reaction illustrates how the interaction between angular price structure and geometric time cycles can sometimes coincide with meaningful market movement. Have you noticed the speed of price movement as soon as price stabilizes above the 8x1 angle? Once price moves away from the intersection of the time boundary and the 8x1 angle, the market begins to move rapidly relative to time, exactly as we discussed earlier. Let us observe another example to further understand how the same geometric framework can be applied in different market situations. In this chart of gold on the 1-minute time frame, we again begin by identifying a clear swing high and swing low. After identifying the swing high and swing low, a circle is drawn from the same reference points. As the arc expands, it eventually reaches a projected time boundary of 3:20 a.m. That's the time when we will look for potential trade setup. After identifying the projected time boundary, the next step is to study how price behaves relative to the angular structure. From the same swing high, the Gann angle framework is plotted to observe the rate of price movement relative to time. We wait for price to approach the projected time boundary created by the circular structure. This moment represents a potential point where time and price geometry may begin to interact. Instead of predicting direction in advance, the focus is simply to observe how price behaves when the market reaches this time boundary. Just before a projected time, the market forms a swing low exactly at the 8x1 angle and begins to reverse. Do you notice the reaction here? Do you see how precisely price responds to the angular level? Once the market stabilizes above this structure, the selling pressure weakens and the market begins to move upward. This is how structured trading opportunities appear when time and price begin to align. A large part of Gann's geometric thinking is built upon the shape and mathematics of square. When the sides of a square are equal, the diagonal that connects two opposite corners represents a very important mathematical relationship known as the square root of 2. If each side of the square equals 1 unit, the diagonal of the square becomes square root of 2, which is approximately 1.414. If the sides of the square each measure 1 unit, the diagonal that connects the opposite corners forms a right triangle inside the square. Using the Pythagorean theorem, we find that this diagonal equals the square root of 2. What makes the square root of 2 particularly interesting is that it is an irrational number. Its decimals continue infinitely and never repeat. This means that although the diagonal cannot be expressed as a simple whole number, it can still be drawn with perfect geometric precision inside the square. In geometry, the sides of the square represent stability and balance, while the diagonal represents expansion. When we translate this idea to market charts, the horizontal axis represents time and the vertical axis represents price. A diagonal movement, therefore, represents the market progressing through time and price simultaneously. This is exactly the concept behind Gann's idea of equilibrium. In Gann's work, the 1-by-1 angle represents a condition where 1 unit of price moves in 1 unit of time. When price moves along this diagonal path, the market is said to be in balance between time and price. However, markets rarely remain in perfect equilibrium for long. When price begins to move faster than this balanced diagonal, it creates steeper slopes. When price moves slower, it creates flatter slopes. These different slopes represent different relationships between time and price. The square root of 2 becomes important here because it represents the natural diagonal expansion that emerges from a square structure. In other words, it represents a geometric transition from equilibrium into expansion. When a market begins to move away from balance, this diagonal relationship often appears in the way time and price begin to expand. There is another geometric ratio known as the silver ratio, which is closely related to square root of 2. Just as many people are familiar with the golden ratio, there also exists another proportion called the silver ratio. The silver ratio is defined as 1 plus the square root of 2. Numerically, the silver ratio equals approximately 2.414. This ratio represents a further stage of expansion derived from the same square structure. If the square root of 2 represents the diagonal of the square, the silver ratio represents a larger geometric proportion that grows naturally from that same relationship. Just as the Fibonacci sequence gradually converges toward the golden ratio, another numerical sequence, known as the Pell sequence, converges toward the silver ratio. The Pell numbers begin as 1, 2, 5, 12, 29, 70, 169, and continue indefinitely. These numbers provide increasingly accurate approximations of the square root of 2 relationship and reflect the same pattern of geometric expansion. When we apply these ideas to market timing, the square root of 2 and the silver ratio can be interpreted as natural expansion factors of time cycles. If a market swing takes a certain amount of time to develop, multiplying that duration by square root of 2 or by the silver ratio allows us to estimate how the time cycle may expand as the market continues to evolve. In this way, the square root of 2 represents the first stage of time expansion from a completed market swing, while the silver ratio represents a larger expansion of that same cycle. These relationships do not predict direction on their own, but they highlight moments where the rhythm of the market may begin to change. Now look at these reversal points on the chart. I projected these time windows in using the square root of 2 and the silver ratio expansions from the original swing duration. When a market reached these time windows, you can clearly see how price began to react and change direction. I will not explain the entire method here because the full structure and calculations are part of my private teachings. This method works very well for both swing trading and intraday analysis. It becomes especially powerful when the market is moving in a consolidating profile, because most of the time markets spend their time rotating inside consolidation phases rather than trending continuously. Recently, I have been reading many philosophical books, and my mind immediately begins connecting it to trading. Many of the concepts about perception, awareness, and the structure of reality seem to reflect the way markets behave and the way traders think. I realized that some of these ideas can actually be useful when thinking about trading psychology, so I thought it might be helpful to share them with you as well. Let's understand how reality itself is understood. In science, much effort has been dedicated to explaining the physical universe. This can include the behavior of matter, energy, and the forces that shape the cosmos. However, another equally fascinating question concerns the nature of human consciousness. While science often studies external phenomena, philosophical traditions have long examined the role of awareness in shaping how reality is perceived and interpreted. Many philosophical and esoteric traditions describe existence as fundamentally infinite. This concept of infinity does not refer only to physical space, but also to time, energy, creativity, potential, and the countless expressions through which the universe manifests itself. When something is described as infinite, it implies the absence of boundaries. There is no final point where the system ends. Instead, existence continues expanding through layers of complexity, understanding, and experience. This perspective introduces an important idea. What we observe at any moment represents only a small fragment of a much larger structure. Our perception is limited, while the underlying reality extends far beyond what we can immediately detect. Modern physics offers a practical illustration of this principle through the electromagnetic spectrum. Energy does not exist in a single form, but travels through waves that vary in frequency and wavelength. Within this spectrum lies visible light, the narrow band that human eyes can detect. Yet this visible portion represents only a tiny fraction of the total range of electromagnetic energy. Beyond the limits of our senses exist radio waves, infrared radiation, ultraviolet light, X-rays, and many other forms of energy. These forces operate continuously, even though they remain invisible to direct human perception. The important point is that invisibility does not imply non-existence. Many powerful forces operate beyond the limits of human senses while still playing a significant role in shaping the world. Over time, however, new instruments allowed researchers to detect and measure these phenomena, expanding humanity's understanding of reality. Each discovery revealed that the observable world was only part of a far more complex system. Even today, theoretical physics suggests that the spectrum of energy may extend far beyond currently measurable limits. Some models indicate that reality continues across scales much smaller than those that modern instruments can detect. This leads to an interesting analogy that we have discussed in the beginning of this video. Imagine the keys of a piano extending endlessly in both directions. Each octave represents a different range of vibration, yet every note belongs to the same underlying harmonic system. In this model, reality behaves like an infinite keyboard of frequencies. Lower frequencies correspond to longer wavelengths, while higher frequencies correspond to shorter wavelengths and greater energetic density. Each range of vibration can be understood as a different layer of structure within the same unified system. These layers interact with one another, forming patterns that repeat across different scales. This idea becomes interesting when we think about markets and trading psychology. The market itself is a complex system where countless participants interact through decisions, expectations, fear, and opportunity. What most traders see on a chart are the candles moving up and down. That is the only visible surface of a much deeper process. Beneath that surface are cycles, timing relationships, liquidity flows, and collective psychology operating simultaneously across many different time scales. In a sense, price movement can be thought of as waves interacting across different levels of the market structure. Understanding this changes how you approaches the market. Instead of reacting emotionally to every small movement in price, you begin to recognize that what is visible on the chart represents only part of a larger structure unfolding through time. When you improve your perception in this way, your psychology naturally changes. You become less reactive to short-term noise and more focused on the broader patterns that repeat through time. Confidence no longer comes from predicting every movement correctly, but from understanding the underlying structure well enough to operate within it. In that sense, trading becomes less about chasing individual outcomes and more about aligning oneself with the rhythms that already exist within the market. Gann's theories go deeper than simple geometry or astrology because he saw the market as a living organism that breathes through harmonics and pulses through angular relationships. He believed that just as planets create tides in the ocean, they also create tides in financial markets. Every angle, including 45 degrees, 90 degrees, 120 degrees, and 180 degrees, is not just a number, but a vibration that shapes future movement. When these vibrations synchronize with price, they form nodes of tension and release that lead to precise turning points. What makes Gann's law of vibration so mysterious is that it bridges mathematics with astronomy and geometry with consciousness. He explained that price carries its own frequency, a number that repeats across angles, degrees, squares, and cycles. When time reaches the same vibration as price, the market is compelled to shift direction because it cannot ignore the harmony that is formed. Gann taught that cycles of vibration operate on multiple layers, including intraday, daily, yearly, and multi-decade intervals. These cycles overlap and interact to create waves of energy that rise and fall. Some cycles reveal themselves through the movements of the sun and moon, while others remain hidden within deeper planetary geometry. The deeper you go into Gann's law of vibration, the more the market begins to feel like a cosmic clock that is precise, rhythmic, and incredibly intelligent. Gann suggested that all financial movements are governed by a universal pattern, the same pattern that appears in nature, music, architecture, and planetary motion. This means the market is not reacting, but is instead following a script that is written through vibration long before any candles form on the chart. Here is the 15-minute chart of the Dow Jones on October 29, 2025, where Mercury formed a trine aspect with Jupiter at 3:26 a.m. This planetary alignment is extremely powerful, and the market clearly responded by printing a clean pin bar at that exact moment. This becomes the foundation for projecting future market timing. From this timestamp, we now track how the ascendant degree travels through the zodiac. We monitor it at major harmonic divisions including 90 degree, 180 degree, 270 degree, and the full 360 degree cycle. These are the exact points Gann repeatedly emphasized as natural vibration checkpoints. Each division represents a shift in energetic rhythm that often corresponds to trend reversals or liquidity events. To find these time points with precision, I use my Gann Astro Ascendant Movement software. After entering the anchor time, the software calculates that the ascendant reaches 90 degree on October 29, 2025 at 10:53 a.m. Now look at the Dow Jones chart on October 29, 2025 at 10:53, exactly when the ascendant completed its 90 degree distance. The market formed a perfect pin bar that rejected higher prices. From that exact moment forward, the market dropped sharply exactly as predicted. The reaction was immediate and powerful, clearing all internal liquidity pockets. This level of precision cannot be achieved with indicators or retail patterns. It comes only from understanding astro time cycles. According to the software, the ascendant completes 180 degrees, which is the second major harmonic, on October 29, 2025 at 3:26 p.m. Just like before, This becomes a forecasted reversal window. As Gann explained, the 180-degree cycle is one of the strongest turning points because it represents opposition and polarity. We now wait to see whether the Dow Jones respects this degree. Again, the Dow Jones reacts beautifully. When a market reaches the predicted timestamp, it takes sell-side liquidity and immediately rejects from the lows. This is classic manipulation, where early buyers have their stop losses taken just before the real reversal occurs. Following the rejection, the Dow Jones quickly reversed and took the previous highs, validating the astro timing once again. This demonstrates how the market respects these cosmic harmonics with remarkable precision. When the same degree repeats, the same vibration repeats, and the market responds with predictable patterns. Next, the ascendant reaches 270 degrees, which is the third critical division, at 8 p.m. New York time. As the timestamp approaches, the Dow Jones continues the existing trend and takes out previous highs in perfect alignment with the cycle. Moving forward, we track the final stage, which is 360 degrees, a complete cycle. According to my Gann Astro software, the Dow Jones completes the 360-degree ascendant distance on October 30, 2025 at 3:27 a.m. This is the most important moment because a full cycle often represents either a major reversal or the beginning of a new vibration. At 3:27 a.m., exactly at our predicted time, the Dow Jones begins printing lower lows, confirming a major cycle completion reversal. This is precision at the highest level because not one cycle, not two, but all degree projections reacted perfectly. This proves the strength of Gann's timing philosophy. Gann also spoke extensively about planetary trend lines, where price reacts along geometrical pathways influenced by astro vibrations. If we connect the highs formed at each predicted reversal time, we create a perfect planetary trend line. The Dow Jones respects this line because it is built from time-based geometry rather than arbitrary structure. The market touches these lines repeatedly, yet never breaks them prematurely. This is a flawless demonstration of Gann's theory coming alive on the chart. Time creates structure, and structure guides price. Planetary trend lines work because they merge two dimensions, time and geometry, into a single predictive tool. Unlike normal trend lines drawn solely on price, planetary trend lines represent vibrational angles that originate from planetary motion, making them far more reliable. Markets move in rhythmic vibrations that follow the same universal mathematics studied by Tesla and Gann. A full vibration, or complete cycle, equals 360 degree, representing one complete revolution of time and price. When this circle is divided into Tesla's sacred numbers, 120 degree, 240 degree, and 3/6 divisions, we uncover key harmonic points where market energy shifts. These divisions act as natural balance points in the rhythm of trading, often coinciding with major reversals, pullbacks, or trend accelerations. In this example of Amazon, we can clearly see how the market reacted precisely at the 120 degree, 240 degree, and 360 degree divisions of the cycle. I have used my custom-coded Gann Astro software to find these longitudes. Each of these points marked a significant shift in trend behavior. The 120 degree zone produced the first reactionary pullback, 240 degree gave a deeper correction phase, and 3/6 divisions completed the full vibration, leading to a new directional move. This repeating rhythm reflects the mathematical harmony. By applying the moon's degree longitude in this study, we captured exact reversal points aligning with the 120 degree, 240 degree, and 360 degree phases of the 369 cycle in this chart of Apple. Each turning point corresponded to a lunar vibration completing 1/3, 2/3, and a full revolution of its energy flow. This alignment between planetary geometry and market behavior shows that price movements are not random. They're rhythmic manifestations of universal law. When time and price vibrate in harmony, reversals occur naturally as energy completes its phase. In this example of Apple, we have taken the April 19 swing point as our anchor and tracked Mercury's longitude movement from that date. Mercury completed its 120-degree progression, and precisely at that point, it formed a clear swing high on the daily time frame, followed by a sharp drop. It reflects Gann's principle that market highs and lows often correspond to planetary divisions of the circle. The 120-degree mark, representing Tesla's number 3, which acted as a harmonic energy shift. This triggered a reversal in price momentum. Similarly, when Mercury reached its 240-degree mark on November 15, the market behavior changed once again, but this time in the opposite direction. The price began forming higher highs, signaling renewed bullish momentum. By the time Mercury completed its 360-degree cycle on May 2, 2025, the reversal had already occurred earlier, and the move evolved into a strong continuation trend. This phase represented the completion of Mercury's full vibrational circle, confirming that the market had absorbed the previous cycle's energy and transitioned into a sustained bullish phase that remains intact even today. As you can see from these movements, the harmonic relationship between Mercury's degrees and Amazon's price structure provided multiple profitable swing trading opportunities. Each 120-degree division served as a potential inflection zone, either marking the end of a move or the beginning of a new one. This shows that every price movement, no matter how random it seems, is part of a larger vibrational cycle of time and energy. When this vibration reaches harmony between time and price, a turning point occurs. In trading terms, each market swing represents a phase in its vibration, accumulation, expansion, and distribution, just like a sound wave rising and falling. These cycles repeat in mathematical harmony, which can be measured through angular degrees, planetary positions, or simple numerical divisions of 360-degree. Tesla called 3, 6, and 9 the keys to the universe because they form the fundamental rhythm of all creation. The same law applies to the market. If a full market cycle is represented by 360-degree, dividing it by 3, 6, and 9 gives harmonic intervals of 120-degree, 240-degree, and 360-degree. These points act as natural balance levels where markets often reverse, pause, or accelerate. By aligning with these natural frequencies, a trader moves beyond emotional decision-making and begins to trade in harmony with universal law. Whether measured through planetary degrees, time counts, or price harmonics, these methods shows a precise roadmap. Those who learn to tune into this invisible rhythm can anticipate reversals, capture major trends, and trade with the same mathematical precision that governs the cosmos.